Well, that was the trading day yesterday. Run us through some of your expectations for the day that lies ahead.
Yes, a very good morning to you, Alishia. I think, just like the weather, it's probably a sunny day, in the market today. As you said, it closed at 3,580 yesterday. I think what we'll see is the market inching a few points ahead today. What's important is that we're seeing lots of foreign activity coming back into the market. I tend to think that will increase as well. We're also seeing retail activity increase. There's a lot of speculators sort of diving into the market. So I tend to think, quite a bit of activity with the market sort of inching up a little bit.
Let's take a look at a few counters that were on the loser board. I mean, Mumias seeing a bit of a pullback yesterday after quite a sterling performance that it's put on so far this week. Are we putting that down to mere profit taking?
In a word, yes. Lots of speculators came in at 3, 4, 5 shillings when it was at its lowest, and as it edged higher right up through to 12 shillings, then we had a whole flurry of investors just seeking to exit, take profits, and that is exactly what's happened. So indeed, it has gone down, and I wouldn't be surprised if it went down a little further.
One would assume then the cycle just continuing with this opening up the way for more speculators to actually jump in, because fundamentally speaking, from what I've been hearing from brokers we've chatted to this week so far, with Mumias, we are looking at a solid and sound company here.
I think the terminology solid and sound needs to be put into perspective. I mean, bear in mind that Mumias, yes, they did declare good profits, 500% EPS growth on last year. But we got to keep in mind that last year was an absolute disaster of a year for them. So 500% is perhaps the least we should have expected. Now, solid and sound, if one was to look at other Kenyan sugar companies in the Western Sugar Belt, fair enough. Maybe that is a good enough assessment. But I think we have to bear in mind that the tariff structures that are in place right now come to an end when it opens up in 2012 to the COMESA producers. And I think if you were to put Mumias, against some of the Southern Sudanese companies, against the Malawian companies, I don't think it is so solid and sound. I mean, I don't think they can produce sugar as efficiently as all the other companies. Mm-hmm. So, they've got their work cut out over the next 2 years if they have to compete internationally.
So certainly their progress will be tracking as we see developments unfold. In the meantime, we've got Safaricom making steady strides in actually tackling the data segment in Kenya. I mean, we've got a new deal being signed with KPLC, and from yesterday's reaction as far as share price movement was concerned, that price going up to 5 shillings 35, it seems like investors are pretty excited about this move.
I think the gains are yet to be quantified. I mean, yes, Safaricom has signed this agreement. We've yet to see how this is going to actually translate into the bottom line. So I don't think that news has necessarily translated into the stock price going up. But it's certainly a welcome move, and we look forward to seeing how this will actually be translated into increased profits for Safaricom.
Of course, it is a necessary move at a time where we've got the environment, especially those tackling the data segment, becoming more and more competitive. We heard just this week that Access Kenya as well has announced that it's completed a 168 million shilling buyout of its subsidiary Open Business System. Reaction to that news?
Rather muted, I would say. The share price 22, 21. It's really not moving that much. I think it's 70% is what they had of OpenView. They've acquired the remaining 30%. It's a welcome move, but a muted reaction in the market.
Well, despite all of the muted reactions we're seeing on all fronts, I mean, companies are coming forward with lots of announcements. I mean, we've heard Kenyan Cobalt as well saying that it's bought 10 more service stations in Burundi, making it in the tiny Central African nations the second biggest marketer of fuel oils there. I mean, what does this say about the confidence of companies themselves and the way they're going to be tackling various economies in the region moving forward?
I think it says a lot. I mean, Kenyan Cobalt has always said it's an African company. It's sort of extending its African footprint. And the move into Burundi is certainly a sign that it's extending its regional footprint. Bear in mind, Kenyan Cobalt is entrenched within the Kenyan economy. It's got operations within Uganda, Tanzania, Rwanda. I think it extended its operations in Rwanda. It's got significant operations in Zambia, and now it's gone into Burundi. So East Africa really is perhaps a place to be. Kenol is trying to become the #1 player. I believe sometime back we talked about Shell actually pulling out from Kenya. So Kenol really is trying to entrench itself within the region. I mean, just coming back to the last point, we're talking about Access Kenya. It's great to see how Access Kenya has moved from an ISP company just 10 years ago to an ICT company in 2010, and just not just providing ISP solutions, but a whole integrated ICT solution. So Access Kenya, if I'm not mistaken, is also going to look at going to Uganda and Tanzania. So perhaps what most companies are looking at is a regional story as opposed to just Kenya-specific stories.